Jaguar Land Rover, JLR, a significant player in the British automotive industry, has been grappling with halted production since a cyberattack on August 31st. This disruption has not only affected JLR's operations but also its extensive supply chain comprising numerous small businesses in the West Midlands. During a visit to the region, Rachel Reeves, the Chancellor, emphasized the government's commitment to supporting these suppliers, recognizing their critical role in the local economy. Business Secretary Peter Kyle has been actively engaging with these smaller entities, acknowledging their vulnerability due to limited assets and resources compared to larger firms. The cyberattack has underscored the importance of cybersecurity in maintaining industrial operations, with the National Cybersecurity Center playing a pivotal role in addressing the breach. While the government has yet to announce direct financial support, the focus remains on resuming production swiftly to mitigate economic fallout. The situation highlights the interconnectedness of large manufacturers and their supply chains, where disruptions can have cascading effects on regional employment and economic stability. The government's response and the ongoing recovery efforts will be crucial for JLR and its suppliers to navigate this challenging period.
The U.S. government, under President Donald Trump, has initiated a significant move to sell TikTok's U.S. operations, valuing the deal at $14 billion. This decision, driven by national security concerns, mandates that TikTok's American assets be transferred to predominantly U.S. investors, with Oracle and Silver Lake identified as potential major stakeholders. The executive order aligns with a 2024 law aimed at safeguarding American data from foreign influence, particularly from China, where TikTok's parent company ByteDance is based. This strategic shift underscores the ongoing geopolitical tensions and the U.S. government's focus on data privacy and security. The sale, however, faces challenges, particularly regarding TikTok's proprietary recommendation algorithm, a critical component of its business model. Lawmakers insist on a structure that minimizes Chinese influence, ensuring compliance with U.S. legal standards. Vice President J.D. Vance acknowledged the resistance from China but noted progress following discussions between Trump and Chinese President Xi Jinping. The deal's outcome could significantly impact TikTok's operational dynamics in the U.S. and set a precedent for future tech-related transactions amid rising geopolitical tensions.
The Harbor International Small Cap Fund reported a Q2 2025 return of 14.64%, falling short of its benchmark, the MSCI EAFE Small Cap (ND) Index. This fund, managed by Jonathan Brodsky and Waldemar, primarily invests in foreign companies' equity securities, including common and preferred stocks. Despite the fund's robust performance, it did not surpass the benchmark, highlighting the challenges of achieving above-market returns in the current global equity landscape. During the same period, U.S. 10-year Treasury yields remained relatively stable, finishing at 4.23% after an intra-quarter fluctuation of 60 basis points. This stability in bond yields reflects broader market conditions, where investors are balancing between riskier equity investments and safer fixed-income securities. The fund's total net assets across all classes amounted to $200,054,354, with 96.99% allocated to equity assets, indicating a strong commitment to equity markets despite potential volatility. The performance of the Harbor International Small Cap Fund underscores the complexities of international investing and the importance of strategic asset allocation in achieving desired investment outcomes.
Northstar Investment Management Corp. has increased its holdings in the Vanguard Short-Term Inflation-Protected Securities ETF, VTIP, by 2.4% during the second quarter, as disclosed in their latest SEC filing. This move brings their total ownership to 174,589 shares, valued at approximately $8.78 million. VTIP, which primarily invests in U.S. Treasury inflation-protected securities (TIPS) with maturities of less than 5 years, is designed to offer protection against inflation, making it an attractive option in volatile economic conditions. This increase in holdings by Northstar is part of a broader trend among institutional investors like Bank of New York Mellon Corp. And Oppenheimer Asset Management, Inc., who have also significantly boosted their positions in VTIP earlier this year. The ETF's price price performance reflects stability, with a 12-month range between $48.28 and $50.81, and it currently trades near its peak at $50.67. The growing interest in VTIP suggests a strategic shift by investors towards safeguarding portfolios against inflationary pressures as economic uncertainties persist. This trend underscores the continued relevance of TIPS-based ETFs for risk-averse investors seeking to maintain purchasing power.
Aspire Capital Advisors LLC has made a new investment in the Vanguard Dividend Appreciation ETF, NYSEARCA, VIG, purchasing 1,495 shares valued at approximately $306,000 during the second quarter. As per the firm's latest 13F filing with the SEC, this investment is part of a broader trend among institutional investors, including Beacon Investment Advisory Services, Inc., TD Private Client Wealth LLC, Teamwork Financial Advisors LLC, and Lakeshore Financial Planning Inc., who have also increased their stakes in the ETF. The Vanguard Dividend Appreciation ETF, with a market capitalization of $97.24 billion, aims to track the performance of the Dividend Achievers Select Index, concentrating on companies with a strong track record of increasing dividends. Despite a slight dip of 0.2% to open at $215.72, the ETF has demonstrated stability with a 12-month high of $217.32 and a low of $169.32, showing an overall upward trend over the past year. Its beta of 0.85 indicates lower volatility than the broader market, making it an appealing option for investors seeking reduced risk and steady income through dividend growth. The continued interest from institutional investors highlights the ETF's potential for reliable returns, especially in a market environment marked by uncertainty and fluctuating interest rates.
The midday stock market saw significant movements influenced by various corporate announcements and market reactions. Mirion Technologies experienced an 8% decline after announcing a $300 million common stock offering and a $250 million convertible bond sale, which typically indicates a company's need to raise capital, potentially diluting existing shares. Similarly, Transocean's stock fell 12% following its announcement to sell 125 million shares at a price notably lower than the previous close, reflecting market concerns over valuation and capital strategy. In the mining sector, Freeport-McMoRan's shares continued their downward trend, dropping 5% after a force majeure declaration at its Grasberg mine in Indonesia, an event that disrupts operations and raises investor concerns over future production and revenue. Conversely, Lithium Americas surged 17%, building on a massive rally, as news emerged of potential U.S. government investment, highlighting geopolitical interests in securing critical mineral resources. CarMax faced a steep 19% drop after reporting disappointing quarterly earnings, with EPS and revenue falling short of expectations, suggesting challenges in the used car market. Meanwhile, Intel saw a 6% rise on reports of potential investment talks with Apple, which could signal strategic partnerships in the tech industry. These movements reflect ongoing volatility in the market, driven by strategic corporate actions and broader economic implications, affecting investor sentiment and stock valuations.
Bitcoin, crypto BTC, has experienced a significant price drop to $111,000, sparking discussions among traders and investors about whether this marks the onset of a bear market or merely a corrective phase in a broader bull market. Notable traders like Ansem and Plur Daddy have voiced differing perspectives on the cryptocurrency's trajectory. Ansem suggests that investors should consider accumulating Bitcoin if it falls below $100,000, with an eye toward a potential exit in 2028. In contrast, Plur Daddy challenges the traditional 4-year cycle theory, predicting a potential upside within the next 3 to 6 months, although Ansem forecasts a more extended bearish period before a substantial rally materializes in mid-2026. The current sentiment surrounding Bitcoin is influenced by broader macroeconomic factors, including anticipated shifts in Federal Reserve policies, new fiscal spending programs, and changes in market liquidity. These factors could potentially set the stage for the next bullish phase. Despite short-term volatility and potential for panic selling, both traders highlight the strategic opportunity presented by purchasing Bitcoin below the $100,000 threshold. suggesting it could be a pivotal trade of the cycle. As the market navigates these dynamics, investors remain vigilant, balancing short-term risks with long-term opportunities.
Opendoor Technologies, Inc., NASDAQ. Open experienced a significant surge in its stock price, climbing over 7% on Thursday, following the disclosure by investment firm Jane Street of a 5.9% stake in the property technology company. This substantial investment, comprising approximately 44.03 million shares, has contributed to increased investor confidence in Opendoor, which operates a platform facilitating the buying and selling of homes. The stock's recent popularity among retail investors is also attributed to hedge fund manager Eric Jackson's social media endorsements, suggesting that the stock is undervalued. The positive momentum for Opendoor is further supported by favorable market conditions, particularly the anticipated rate-cutting cycle and a robust housing market report from the U.S. Census Bureau and the Department of Housing and Urban Development. The report indicated a 20.5% month-over-month increase in the sales of new single-family homes in August, with a median sales price of $413,500. Opendoor's shares have more than doubled in the past month and soared approximately 450% year-to-date. The company's latest fiscal quarter results exceeded revenue expectations and marked its first quarter of adjusted EBITDA profitability since 2022. However, technical indicators suggest that the stock is nearing overbought territory, which could lead to a price pullback if momentum weakens.
Marvell Technology, NASDAQ, MRVL, experienced a 3% stock price increase following significant insider buying by top executives, including CEO Matthew Murphy and CFO Willem Meintjes. On September 25, Murphy purchased 13,600 shares at an average price of $77.09, investing approximately $1.05 million, which increased his direct ownership to 268,637 shares. Meintjes, along with other key executives, made substantial purchases totaling over $2.1 million. Such insider buying is often interpreted by investors as a strong signal of confidence in the company's future performance, potentially influencing market sentiment positively. This strategic insider activity comes at a time when Marvell Technology is navigating a competitive semiconductor market. The purchases suggest that the leadership team believes in the company's growth prospects, which could be driven by advancements in data infrastructure and 5G technology. As insider transactions can provide insights into a company's health, this move may bolster investor confidence and influence stock performance positively in the near term.
The financial markets witnessed a significant event as stocks surged on September 22, marking a third consecutive day of record-high closes. This bullish trend was primarily fueled by optimism surrounding the AI sector and expectations of further easing of monetary policy by the Federal Reserve. However, Federal Reserve Chair Jerome Powell's cautionary stance on September 23 tempered this rally. Powell signaled a gradual approach to rate cuts, emphasizing the challenges in managing the Fed's dual mandate of stable prices and maximum employment. His remarks set the stage for the release of the Personal Consumption Expenditures (PCE) index on September 26, a key inflation measure that could influence future rate cut expectations. In the midst of these macroeconomic developments, the focus has shifted to undervalued stocks on the NASDAQ, with Incyte Corporation, NASDAQ INC, being highlighted as a noteworthy candidate. Incyte, a pharmaceutical company known for its innovative treatments, recently presented promising clinical trial data for its drug povorcitinib. Despite the potential of this medication to generate significant revenues, analysts suggest that Incyte's shares are fairly valued as the company navigates the impending expiration of its ruxolitinib patent by 2029. The broader market sentiment, combined with strategic company developments, underscores the delicate balance investors must maintain between macroeconomic indicators and individual stock performance.